Trading app Robinhood suffered a second outage yesterday. That app was down throughout Monday, leaving users unable to take advantage of the largest ever point gain in the Dow, and was fully operational by noon yesterday as stocks fell after the Fed's surprise rate cut. Reports say that the trading app now faces regulator scrutiny. Joining us right now for a look at how this will impact Robinhood's reputation is Dan Primack. He is business editor at Axios. And Dan, Robinhood has been the darling for a long time. They set the standard of zero trades or zero cost trades. Now you see this happen. What does this tell you?
Well, it's a disaster, obviously, for Robinhood, and particularly kind of for its high-volume users. Now, remember, lots and lots of Robinhood users didn't really they experienced an outage, but they probably didn't notice, right, because they weren't necessarily trading over the last 2 days. But for its most regular users, it's a mess. And the thing about Robinhood is, while it's got a really clean interface, and people love that, and there's a cash management feature, a big piece of it, that $0 trades, everybody else has followed suit on that starting last fall. So that's no longer really a differentiator for them. So if you're somebody who feels you got screwed over, you can go to another service and get the same benefits that you used to only be able to get from Robinhood.
What was the problem? Too much trading activity? Or their system's just not ready for it?
We don't exactly know. They originally said, our systems were having problems communicating with each other. They then took about 24 hours to come out with a statement, no apology, but a statement last night. Yeah, which said that basically their DNS didn't work. They got overloaded by too much activity. There's a bunch of engineers on Twitter who are kind of questioning pieces of that, don't quite understand it. There's going to have to be a serious audit of this, a third-party audit to figure out what really happened.
So do you see kind of movement now towards the Schwab's, Fidelities? I mean, we saw Schwab is buying TD. E-Trade is not going to be part of Morgan Stanley. I mean, all this was caused with zero trading. So, a year from now, do you think Robinhood still exist? Because individual investors can do all this themselves.
Well, I think it'll still exist. I think one of the questions is someone going to buy Robinhood? And if somebody was thinking about it, particularly, when Morgan Stanley announced the E-Trade deal, a lot of people jumped and said, someone's now going to try at least to buy Robinhood. Why wouldn't you? It's very popular. One of the things about Robinhood is even after everyone went to those zero trades last October, Robinhood's user base grew. In fact, it grew faster in Q4 than it grew in Q3. It grew faster, I am told, in January and February than it did in Q4. So it was still expanding. Robinhood was a wonderful acquisition target for somebody else who wanted to rival what Morgan Stanley did. What happened over the last 2 days, though, clearly puts that into question.
And what do you think regulators are going to do?
Well, I think they're going to look. It's interesting. There is a law on the books here that Congress could actually theoretically take a look at this, although it's supposed to be based more on bigger systemic issues, for example, like the flash crash. What happened with Robinhood affected Robinhood users. It didn't affect the markets as a whole. But look, regulators are going to have to take a look at this. And as I said, there is going to have to be a serious tech audit. What Robinhood has said so far just doesn't cut it.
How many customers do they have?
I honestly don't know the exact answer, except to say a lot, and it definitely skews younger. They are known as a millennial-focused company.
So you think they still would be an acquisition target, just at a lower price?
I think so. And look, obviously we'd be talking longer term. Anybody, and I don't have any information that somebody was in talks to buy them tomorrow, but anybody who was clearly is going to want to understand what happened, and why the outage happened. But yeah, they could definitely still be an acquisition target. They're still a very popular company. They still run a lot of trades. There is, though, probably a new litigation risk now. I mean, you'd have to be able to prove, I don't know how you would prove that you were going to make trades, but if you were a Robinhood user and if your money was sitting inside of Robinhood and you didn't get to play on the biggest gain in points day ever for the Dow, you've got to think there's going to be a class action lawsuit.
I think anybody who tried to log in that day who couldn't actually has a claim.
Yeah.
Well,
irrespective of what kind of email
you don't even know what they were going to do. You don't even know if they were just going to look at the price. You don't even know what they're going to do. But if you were trying to log in and you couldn't on that day, I think you have a claim. By the way, just to answer your question, it's a little over 10 million users right now. Wow.
There you go.
That's substantial.
What's worse, that not being able to get in that day or
on the down day?
Yeah, trying to, back in '87, no one was picking up the phones.
Well, look, yeah, I mean, Robinhood, unfortunately, I mean, it came back online after a couple trading hours yesterday. In theory, maybe you could have, if you couldn't get in on the upside, you also couldn't get in on the downside. But I guess you only got in on the downside yesterday.
You missed on both sides. You missed the whole turn up and down.